Here are some current themes. Banks, I think, are a unique investment in the whole world, a protected oligopoly of companies that produce record profits every time they produce results, pay most of it out as dividends, complain about the challenging conditions, which is all a complete lie, to keep the super bank tax off their back. You won't find that in any other country, so in my safe income portfolio, I just stick the banks. You know, even in the GFC, they fell 56%, and now they're up 140% since then or something. Superannuation, this is going to grow 18 times. Self-managed super is going to grow 18 times. If the market goes up 5% per annum and we get 12% contributions every year, you can see 17% per annum growth per annum. How many industries have got that? So that covers the wealth management industry as well. We're all just going to make a fortune over the next few years. Telecom Services, the NBN build is still flying along. Amcom, IINet, all these companies are already done fabulously, but probably continue to do so. I don't think safe income's going away. The whole resources boom turns into dining room theme for Asia, feeding Asia. We saw what happened to Warrnambool cheese and butter. There is demand for all these assets. I haven't got time to go through them all, but you can see here a whole load of different themes that are working at the moment. The retirement theme, housing markets obviously banging along with the prospect of interest rates staying down for years. As we know, these stocks have been doing well out of education. I'm not sure that's a great thing because I think that could change. And tourism as well, what the Aussie dollar does. You also got to think of what to avoid and themes to avoid. I got a criticism from someone the other day saying I'd be far too negative on China. I haven't held BHP in a portfolio for 3 years, and as I went to look at this is Fortescue, BHP and Rio relative to the ASX 200 on a 10-year chart. Why would you ever go near them? So I'd only ever consider them as one of the trading stocks. You know, this can be quite a big move. These can be, I'd just trade them, but I certainly wouldn't be investing in them. Lastly, one way I would differ from most value investor approaches, and probably Skaffold as well, is that I do try to time stocks. So what I'm doing is I build my own list, and then I go and look at how they're trending and just watch out for the alarm bells. So there's Telstra. You know, I don't want to teach you technical analysis, but this is where we bought in, and it was on this break of a downtrend. We're looking at a different trend, and all we do is when it breaks trend, when it changes trend, it's a great time to go and have a look. It's just a trigger to go and have a look. Does it pass all your quality criteria? Yes, it's trending up okay, I'll buy it.